Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns by keeping you up to date with everything you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications because every time we drop a new episode, money is made. Now, today we're going to be talking about the anchored volume profile. All right. We're going to be talking about the anchored volume profile. This is a special tool that investors and traders can use to be able to see where the largest buyers and sellers most agreed on price. Now, this is important because you want to understand where key decisions were made in the past and where they could be made in the future. Now, by anchoring your volume profile to a specific date, you're essentially asking where the largest buyers and sellers were most active during that period. So, for example, I'm going to delete my previous anchored volume profile here. Let's go ahead and get that out of the way. And I usually lock my tools on my indicators, and everybody should. Let's see here. Now we go into this. Get this out, right? We go into our left panel here, fourth down, right? These are forecasting and measurement tools. We select the anchored volume profile. Now, as I said, by anchoring it to a certain date, you're asking where the large buyers and sellers were most active during that period. So, if I wanted to know where were they most active year to date, I would take my anchor volume profile and I would set it at the first day of the year. And then now I have all of my volume profile nodes popping up to show me what's going on. Okay. Now, I would recommend analyzing a year of volume for traders who are holding medium to long-term positions. And I recommend key reversal highs and lows for traders who plan to trade short to medium term. But the first priority for a new trader should be to understand every aspect of the tool. Now, let's talk about this here. So I went year to date, and so we can see here. Look at all your high volume nodes. All right, so all your high volume nodes. We'll talk more about that in a few moments. All right, I went year to date here. Let's talk about what I mean when I say a key reversal high or low. So this would have been the highest point of the year, right? So where's most of the buying and selling occurred since that high? That's basically what I'd be asking when I do this. And that's amazing to see that because now it's really telling us, hey, listen, most of the buying and selling has happened here. This is our point of control, right? We're currently experiencing some resistance around this area right here. Our next point of resistance would have came around this area here, right? If we were to continue higher. Now, starting with your volume nodes, just so we can get an understanding. All right. Your volume nodes make up the profile. So that's all these little these little points coming out of the left side of the chart here. Now, the anchored volume profile usually sits on the right side. I move it to the left side because I think it's more useful over here than crowding my chart on the right hand side. Okay. Now, each node represents a certain price range. So as you can see, this one is between 575-ish and 573.75. So that's about a range of $1.25 right here. Okay. So each node represents a certain price range. How many nodes you choose to utilize will determine how big of a price range every node covers. If you choose to use lots of nodes, you will have more granular data, as every node would represent a smaller price range, and that can go down to pennies. And so having more nodes also breaks down the the true data that's hidden in each larger node. And let me explain what that means. So we said that this one was like a $1.25 range, I think it was, right? Now watch this. So what I'm gonna do is I'm gonna place a box here, right? I'm gonna place a box right here, and I want you to watch what's gonna happen. Okay? I'm gonna place a box right there and watch what happens when I say I want more nodes for my volume profile. Okay? So now I have 40 rows. What happens if I said I wanted 80? Ah, what do we realize? We realize that more volume occurred at the high end of this range than the low end of this range. You see? All right? More volume happened at the high end than the low end. Okay? Now, what would happen if I said I wanted 160? I know. So I'm doubling it on purpose. So that's going to turn those two nodes into four. Okay? So let's double it now. Ah, so in the high end of this range, somewhere around 574.37 is where the most happened. But if you go down to like 574 flat, right? Or down towards that 573.75, a little less happened there. At the very top of this range, there was actually some buying, right? You can see that. You can see this little green node right here. There was actually some buying at the top end of this range, but today, as we can see, the market is coming down after we had more tariff conversations coming out of the White House. All right. Now let's talk a little more about these nodes and how to understand them. All right. So having less nodes gives you a more clear picture of where decisions were made without the nuances, right? Without the nuances. And it gives you a more understandable and less noisy picture of what's occurred. Let's break this down here. So I have these four nodes within this box, right? Because I essentially took the 40 bars and turned it into 160. So this one bar became four bars. And now I can see, that right here was where the most volume occurred in that area. But that can be a little too granular and it can be a little too noisy. So it's important to determine, well, how much data do I really need to be looking at, right? So if I dial it back down to 40, you can see again, like, so I have less noise in front of me. right? But here's the thing about these nodes, right? The larger ranges collect the data within the smaller ranges. So that's why you saw when that 4 turned into 1, we just extended out to here, right? So you have you know, all 4 of those smaller nodes turn into this one larger node, and all the volume within those 4 is in this one now. Now, so if I were to cut this in half now, let's do something similar to what we did on the higher end. Let's cut it in half now. If it was to cut it in half, then those 2 nodes, right? Let's go back. Let's go back to 40. Notice what happens. These 2 nodes become 1 when I bring it down to 40. When I bring it down to 20. Right? Watch what happens. Boom. Okay. So the question really becomes: Is this enough data for you? Is this enough data for you? That's the real, that's what really matters here. Okay. Now, the market tends to move from one high volume area to the next, right? And trends usually happen in between the high volume nodes, whereas stalling, consolidation, reversals, those things tend to happen at or around high volume nodes. So you can see when we hit this high volume area here, we did what? We stalled. All right. When we got around this node right here, we stalled a bit, and look at how quickly we went from here to here. We skipped all of this in between. We skipped all this in between pretty much, and just went from here to here. Right? So the markets usually should be looked at as going from one agreed upon price to another, and that would be based on whatever data or information the market's trying to price in. Okay? Now, next we look at the point of control. Right? This red line right here is your point of control. Now, I set that to be, right? I set that to be, a straight line that's red, so that it can be easily identified on my chart, right? So no matter what I have on this chart, that can be easily identified. And I'm going to move these moving averages out of the way for right now anyway. We don't actually need them right now. All right? So, as we mentioned earlier, high volume nodes are where buyers and sellers most agreed on price. The point of control is the actual most agreed upon price in that period. Okay. So year to date, this was the most agreed upon price, right? 560.95. It probably was around like 561-ish. I'm probably off by a nickel, right? So 561 was the most agreed upon price so far this year. More buying and selling happened here than at any other point on the chart. Second most agreed upon price is here, as you can see. That's our second, right? Second largest node. So it's pretty interesting that the market did move up to this area. Now, your point of control usually sits right at the center of your highest volume node, and that's because, right, we're looking at the most agreed upon price, period. So that's going to be smack in the middle of your highest volume node on the chart. Now, traders use the point of control in many ways. Some say above the point of control, the market is bullish. Below the point of control, the market is bearish. Some believe the market is attracted to the point of control like a magnet. Some may just use the point of control as support and resistance. I look at it as information. Keeping it simple. I now know where the stock market most agreed on price. I now know where the most volume occurred, which means I now know where the largest buyers and sellers accumulated or distributed the most shares. Now, at some point in time, that information will become very useful, but it's important to remember that the time must first come. And that's what a lot of people do. They see something and then they turn it into something that it's not. Right? This is just information. This is just information. Take the knowledge you have and put that into how you use it. So, for example, if we were trading just above the point of control, let's say right around here, right? And let's say a labor market report was coming out, the jobs report was coming out. Very impactful news. And after the report came out, the market just sliced through the point of control and, no buyers came whatsoever. The market just sliced through it like butter. Right? In that regard, it's in that moment letting us know that where this was once the most agreed upon price, whatever information was just given to the market, the largest buyers and sellers are not looking to pick the stock up at this price any longer. Right? It seems as though they would be looking for a price lower. And once you see the market stabilize and find some level of equilibrium, then you might have an idea of what that price actually is. Right? So that's a better way to look at using the point of control. Right? Is as a piece of information that can help us understand what's going on in the market. Now, next is the value area, which is the area where the largest percentage of volume occurred. Now, when a trader sets the value area, they're saying, show me where this percentage of the volume occurred. The value area high and low outlines, right? This is your value area high, this is your value area low. Value area high, this dashed line right here, value area low. And we'll talk a little bit about that, right? So the value area high and low outlines that area for traders, showing them where the boundaries are. Now remember, the most volume happened at the point of control. So naturally, as you go further away from the point of control in either direction, you have less volume. Naturally. For example, no volume exists above the all-time high. Right? No volume exists, let's move this out of the way, above the all-time high. It's impossible. Because, well, we've never been at that price. There's never been an opportunity to buy anything at that price. Okay? So above the all-time high, no volume. Now, setting the value area high on your chart gives you an idea of where the market may become extended. All right? Same goes for the value area low. Most anchored volume profiles automatically set that level to 70%. So once the market moves outside of that area where 70% of the volume has occurred, traders may need to analyze the market to see whether the market is showing signs of exhaustion or signs of overbuying or overselling. Now let's go ahead and I'm gonna move this one out of the way really quickly here. And I'm actually gonna go back in time to 2024 here. right? As I said, it's based on where you want to set it. I tend to do more swing trading and position trading. So, you know, I'm going to keep my anchor volume profile set from the opening of last year until we get further into this year where I have more information. All right. There's not as much information here right now. Okay. So here's what I meant when I said that if we're above the value area high or low, if we're above the value area high or below the value area low, we may need to see if there's signs of exhaustion or signs of overbuying or overselling. Now, here I have the RSI, right? We broke above the value area high, right, at around this point here, right? October of last year. November took us right to new highs. We set the highest point on the RSI here in December. Now, in January and February, we set new highs in the market, but look at what was happening to the RSI, right? We had new highs coming in here, but we had lower highs coming in for the RSI. So above the value area high, we were getting a divergence, right? So if this wasn't occurring, let's say when we hit this new high here, we got a new high on the RSI, right? Then the market in that particular case may be looking to continue to set new highs or down here, setting new lows. They may be looking to continue to do that, and this would in turn actually expand the value area and shift the volume profile. Okay. So I just wanted to just point that out so that way we can keep that in mind. Let me get this out of the way here because we don't actually need that. Right. Now, traders should give their value area high and low special characteristics, in my opinion. So that way they can easily be identified and differentiated from different things they have on their chart. Because, if you're like me, you're going to have, like, I'm going to have Fibonacci's on my chart. We'll talk a little bit about that in a second. So for the value area high and low, here's what I did, right? I used dashed red lines, right? I used dashed red lines. I'm going to actually turn that up so you guys can see it better, right? I use dashed red lines for my value area, high and low, all right? And so as you can see, it really stands out on my chart, and I can't miss it. So, for example, when it's time for me to set my Fibonacci's, all right, let's talk about that. So it's time for me to set my Fibonacci's. Um, I like to use my value area high and low. Now, a lot of people are familiar with the Fibonacci retracements, but they're not really familiar with what they're meant to do and what they actually are. All right. So Fibonacci retracements are meant to give us key support and resistance between two significant levels on the chart. By using a Fibonacci retracement, let's say from this all-time high to this most recent low, right? Let's say, and I'm not gonna get all granular and go, let's just say this is what I did here, right? Then, and let's reverse this. Then now I see where the market can retrace to, and as you can see, right, we were just at one of those levels yesterday, right? And I can bring this up a little, right? By the way, if you're on TradingView, I can just hold control and actually snap it to this level if I wanted to. All right. So if you're on TradingView, hold the control key down and it will actually snap it to the levels. Right. I'm not gonna leave this here, so I just wasn't trying to put it exactly on it. Right. But But that's the point, right? So that's all. So that's what Fibonacci is meant to do. Measure the range, right? And give you key support and resistance levels in between that range, right? Now, using the anchored volume profile, I have my value area high and low set to 70%. So 70% of the volume since January of 2024 has been between this price here around 561.80, right? And this price around 466.79. Okay? So 70%, most of the volume has been in this range right here. All right? So what I want to know is where's the support and resistance at in this range? And and um if if I'm trading above the value area high, then I can have extensions go beyond this point and show me support and resistance beyond the value area high. If I'm trading below the value area low, right, and I'll show you guys right now, I can have support and resistance below that point. That's what extensions were designed for. So I'll set my Fibonacci's to the value area high and low, right? And like I said, I'm not trying, you don't have to be exact, that's good enough, right? And I can see, right? You can see right now, look at it, right? This goes beyond the value area, right? So the market went to the 1.5 retracement, and that was where we stalled out at. You can see the trading between the 138.2 and the 1.5. Okay, so that's what I like to do. I like to just find where's the support and resistance at between two significant points, because that's the greater, grand scheme of things with the Fibonacci. Now, don't get me wrong, the the initial onset of using the Fibonacci in the market was meant to, you know, um, find those key support and resistance areas around your, like, for example, some of you guys have used the Elliott wave theory, from the low to the high of the fifth wave, right? You can do it like that. Or if I want to say, well, where's my key support and resistance from the lows of 20, from the low, from this low here to this high here, or so on and so forth. The Fibonacci retracement can help you with that. But when you understand these tools, and this is why, for new traders, I recommend spending lots of time studying and reading about these indicators. Spend lots of time reading and studying the Fibonacci's. Spend lots of time reading and studying the anchored volume profile, reading about the RSI, right? Spend lots of time studying them, because once you understand them, you actually break a lot of limitations that you're going to have. All right. I mean, look at my chart and look at how these Fibonacci's are actually sitting around these volume nodes. Look at it, right? Look at it. Boom, 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 boom. All over the chart, just sitting right around these volume nodes. It's crazy how these levels are so on point. And all I did was say, what's the key support and resistance between the value area low and the value area high, right? That's all I said. Now, I'm going to move these Fibonacci's out of the way one more time here, because I wanted to, actually want to point something out for new traders, okay? Something that you can do in order to get used to what I was just doing there is increase the thickness increase the thickness of your value area high and low for now, right? So you go to style, right? And just like like how I changed the colors and made it dashed lines, um, change the thickness of it so that way it's even easier to identify on your chart. Okay. Um, you should definitely do that if you're having, issues with, locating them from time to time. That way it's this thick level and this thick level, right? And you don't have to really because I've seen traders, go from here to the point of control, for example, not really realizing, no, it has to be the value area low and the value area high. It has to be these two levels right here. It has to be. By the way, notice how your point of control is exactly 50%. Okay, notice that. Okay, notice how that's 50% of the range, right? Because that's what it should be. It should be the center of everything that you do. All right. I hope this video was helpful. I look forward to giving you guys more content like this in the future. Be sure that you check us out on Twitch from time to time. In fact, I'm going to be on there in about 10 to 15 minutes for Power Hour. Come through and check us out. The link is in the description once again. Also, make sure that you follow the YouTube channel and make sure that you subscribe because every time we drop a new episode, money is made. Later.